but that's just a really simple change in momentum. You took out a couple of liquidity levels, and then we're pushing up bullish again, okay? Daily level takes us to 1.74. Your next level up, your potential of your trade takes you right up to another kind of 4-5R. Okay, so two really, really good trades. We've got some really clear rules that we want the traders to start following. So many traders don't trade with trading plans, and it's a really naive way to get into the marketplace. It's something that I did for a very long time, and ultimately just lose money. So teaching the guys how to put together trading plans, I think, is really, really important. I want to see what they put together first and foremost, so I'm kind of leaving it up to them to kind of work it out for themselves, and then I'm going to critique them from there. We did some reviews today on the trades that we took this week so far, which is good to kind of dig into. A really important rule as well of trading what you see, not what you expect, and how to implement that, because I think as traders we have this knack of kind of trying to predict where the market is going to go based upon what we think might happen, like catching a reversal as an example, when actually if you've attempted to catch reversals in the past, you know that it's actually a very unprofitable trading strategy. And actually, if you just trade into the reversal area, you probably win more than you'd lose at the moment. So that's a really, really important thing. We finish off today with a chat about divergences as well, and how to use divergences on things like EURUSD and gold, and how they can really help your trading. So this is a massive watermelon, Spanish of course because I'm in Spain. I hope you enjoy the video. If you're not doing so already, as always, please can you subscribe to the channel, pop me a like and a comment below if any of these tips were helpful for you too. Cheers. Anna's just asked me a question because she sat on the sofa whilst I'm listening to me rattle on. Oh no, he hasn't got blue eyes. Have you got blue eyes?
Brown eyes, brown hair.
Are you 6'5"?
I wish. 6.
Are you 6? Oh, okay. But you do work in finance, don't you?
Yeah.
So I said, she said, "Oh, Pete sounds like a nice guy." I said, "Yeah, he's a nice guy." I was talking about the little bits that I knew about you. I said he's a bit posh. I said he works in finance, so he knows what he's talking about. And she was like, "Oh, he's 6'5", he's got blue eyes." Like the song. Please tell me you know the song, otherwise. Yeah.
I'm not going to sing it, and you're not recording, so it's fine. It's all right.
I am recording. I'm always recording.
Is it already recording?
Yeah.
Oh Jesus!
Recording.
Right, I'm definitely not singing then. Yeah.
Anyway, why are you looking for a guy in finance? 6'5", blue eyes.
It's because you've got a guy in finance. Come on.
Yeah, I'm in finance. Thank you very much.
You're not 6'5".
Definitely not 6'5", and I have the blackest eyes in the world. All right, Steve, Chris, how we doing?
You all right?
Yeah, good.
Yes, good, thanks.
Good. Are you finished on your holidays now? Are you back home, Steve?
No, next one on Thursday.
Oh, your next one's this Thursday, is it?
Yeah, for 10 nights, yeah.
Lovely stuff. How are you getting on with the course?
Yeah, I'm just on the training plan now.
Nice.
But that's my first run.
First run. I've got a new trading plan coming out with it as well, which I think slightly better, if I'm honest. I've made a few tweaks that I think is better because obviously it's difficult for me, because obviously I know the strategy really well. It's difficult for me trying to then fit it to a newer brain, if that makes sense. So I've got a new plan coming out that should simplify a lot of things as well, and help you guys really get stuck in without too much confusion, because like we discussed last week, the trading plan is built as a strategy, a complete strategy that you can implement different times of the day, different entry models, different ways to get into the marketplace, as you've now found out. And we've got to build strategies out of it. So I want to do maybe 2 or 3 new trading plans for different people, different time zones, and things like that can hopefully really help. Chris, how are you getting on with it? Have you got through it yet?
I've watched about half of the video, I guess, the course video.
Nice.
I've watched most of the main content, and then there's loads of extra webinars and things, right?
Yeah. The webinars are good. They I think they give you a bit more of a hands-on approach. One of the things I always found difficult with trading strategies is kind of seeing them being implemented. And one of the things that I'd quite like to start doing going forward is doing more live trading sessions where I'm kind of available. I've got a bit more free time now that I haven't had previously. And what I'd like to start doing, at least for the London sessions, is just doing some live sessions and kind of talking through my thought process, getting into trades live and showing you guys. I'll obviously record those and I'll cut them up for any bits that are worth watching, so you don't have to have 3 hours of content to watch every single day. But if ever you've got time free, guys, jump into those, because those are going to be starting from next week. When I see some good opportunities, like if it's looking like it's going to be a shit day, I'm not just going to sit at the charts all day and just stare at them. Anton.
Hi, mate. Yeah.
Good. Abby's with us tonight. All right, Abby? Abby's normally got the worst.
Hello.
Yay. Your internet's working today, then?
How are you?
How many times are we going to lose you today?
I don't think so.
Don't
I'll
think
be
so?
here.
Okay, good. Lou, you all right, mate? How you doing, brother?
Actually, I've been using your strategy exactly.
Good.
But I'm trading in the Indian markets because most of the times the forex,
Yeah.
first reason is I haven't watched the whole boot camp, but I have gone through the first part.
Okay, good.
And right now, what I'm doing is I'm just seeing the charts. So let's say one daily liquidity is taken.
Yep.
After that, I see if there's a reaction and the pattern forms.
Yeah.
And then if there is an imbalance, I see, like, I'm just copying your exact setup and it's working.
Good. I should hope so.
I guess I've made like 30, 40, like if I convert it into pounds,
Yeah.
it would be like 300 or 400 pounds using
Happy
your
days.
strategy.
I love that. Well done, man.
And okay, let me open the camera because I guess it's off.
There he is.
So I had a really less capital. It was around, if I convert it into pounds again, it would be like 1,000.
Mm-hmm.
Not big.
Mm-hmm.
That was surplus cash that I had. And what I am doing, I'm just simply seeing if the daily liquidity is taken.
Yep.
A reaction is there.
Mm-hmm.
As soon as I see an imbalance reaction from the liquidity,
Yep.
I then wait for the trend to reverse on the other direction twice.
Yep.
So there's a break of structure.
Yep.
So first there's a change of character and then a break of structure again.
Yeah.
After that, there is liquidity. Either if the liquidity is taken from above, the downtrend will start and the trend line liquidity or some sort of double top, double bottom liquidity will be there. And I just wait for the liquidity to get taken.
Yeah.
A bullish or bearish candle, depending on if the liquidity is from the buy side or the sell side. And I just take a 1:3 trade. That's it.
Love it. Well
I
done, man.
haven't lost any trade luckily till now.
Well, 100% win rate as well. I'm going to caption that.
Currently,
put that on an Instagram reel. 100% win rate guaranteed. Abby says so. Love that. It's great. And well done. So look, I've got a few things kind of in that same arena that I want to talk through today. I'm just going to go and kind of talk through my trades from last week. Me and Pete and a couple of the other guys, we're doing some work together over the next couple of weeks because we've got a few people doing challenges. And did not want to do that. What have I done there? Hang on. That's not right. No.
Actually, I also want to join with you and like you are teaching everything. I'm just not able to follow up due to my health issues. I'm just waiting for them to get solved so that I'm back on charts and back testing and figuring out more stuff, more strategies and more business.
Right, just give me 2 seconds. I'm just looking at the charts. I don't know what I did there, but I did something I shouldn't have done. Right. Can you see my screen? No?
Not yet.
Right. Can you now?
Did pop up for a second.
It did it? And then okay, cool. Can you see that now?
For a second and then it disappeared. There it is.
Yeah,
got it.
Perfect. All right, cool. So I want to talk through a few trades, obviously, from last week, and kind of my thinking behind them. I think I have most of them on here still. Obviously, great day Wednesday. And then we will talk through a few things that I would like you guys to implement. So I'm not sure if you saw my messages in the group earlier, but one of the things that I want you guys to acknowledge and to really make a big effort doing is if you're trading any kind of prop firm, live account of any kind, so if you're trading real money, okay, of any kind, then you need to have a trading plan before you take any more trades, okay? Now, it doesn't have to be a really in-depth document, because often is the way with trading plans is that they will kind of grow and develop over time, right? So you need to make sure that you have rules written down, and it doesn't have to be that complicated at first. It can just be when you're trading, what you're trading, and how you're going to trade. And from there, what you can then do is, as you take trades following these rules, you can take snapshots of those trades, and then you can put them in your trading plan. And it will something that will slowly develop. So my trading plan is on version 5.6. Okay, so I version them all, and every time I come up with a new trading plan, I come up with so if the strategy changes completely, and I've had 5 different strategies over the time, then it has a whole new number. So I'm on strategy 5 right now, which is what I use every day, and I'm on version 6 of strategy 5. So my trading plan is trading plan version 5.6 now, and it will gradually grow and develop over time. Eventually, you want to have everything in it. Now I'm talking the intricacies of what you do around news trading, how your tendencies might change on a Monday and a Friday because they're lower volume days, how you might trade differently because you are really busy and are going to be out of the office all day, for example. Okay, nuances like that eventually you want to be in there, and it wants to become like a Bible. So mine is about 12 pages long now, 12 A4 pages long of everything you need. But before you get to that detail, okay, you need to have at least an A4 page of what you're looking for, when you're looking for it, and how you're going to enter the market and exit the market. Basic stuff like that. And then it will, over time, if you're doing anything, thinking anything, or experiencing anything in the marketplace that you're making decisions about, that then should go into that trading plan in written form. Okay? There's a real power around writing things down. There was a reason why at school the teachers made us write down from notebooks or to copy down from notebooks. It wasn't sufficient enough. Whilst it may not be the best learning strategy when you were at school, ultimately, there's a reason why teachers used to ask us to write things down from a textbook. And I used to remember thinking at the time, what's the point? It's written in the textbook. But you just know reading something or hearing something isn't sufficient enough. What happens to the information is when you process it to the point where you write it down, or you make a document about it like a trading plan, it then becomes more fixed, firstly, and then it holds some accountability to it as well. You now will make sure that you stick to that. You will feel obligated to stick to whatever those rules are, because you've put them in your trading plan. And then over time, it'll develop, okay? The other thing that I would suggest that you do is you have that trading plan, however long it is, 1 page, 2 page, 3 page, whatever it is that you decide to do at this stage, and you condense it down into bullet points, okay? Or what I would call the checklist. So for example, if I'm taking a trade, and we'll use this trade as an example, okay? My checklist is I need a key liquidity swept. So we had our key liquidity, which was here. This was the Asia sweep, okay? So I need my key liquidity swept, okay? I then need to make sure that we're in premium pricing of whatever range it is that I'm in, okay? So I look down into from here to here, okay? And I'm in my top half, so I'm in my premium pricing, okay? So I'm happy that I'm able to take a trade from here. One of the filters I quite like using these days is that we're above the daily open, okay? We're above the daily open. One of the things that isn't in my checklist, but I always like to make sure that we're acknowledged, is that we're not inefficient. So this would be our EPA line, okay? Which, as you can see, we've met, so we're not inefficient, okay? So there's no real reason for price to push higher. And then I use my lower time frame confluences, so nothing in here allowed me to get in. Now, old me would have entered like this before it had any breaker structure. I used to do that all the time. And what happened, sadly, in those moments, more often than not, is price did pull down like this, but then it just did that. And that's where, it then does the reversal on you. That's where the complex reversal came from, by the way, guys, okay? So for me, I need my lower time frame confirmation, and I've got 2 lower time frame confirmations. One is a double breaker structure. 2 is a complex reversal, okay? If I don't get one of those, I'm not interested in taking the trade, okay? I need clear momentum for me to get into the trade. That's my lower time frame confirmation. Then I need some sort of pullback, which I get the pullback, and then we get into the trade from there and we go on, okay? Now, for me, before this trade was confirmed, and this was on the Wednesday, I think it was, before this trade was confirmed, I was actually bullish. So I took a buy, okay, because that was valid to where I was, okay. I'm getting better, but still struggle, and me and Pete were talking about this just a minute ago, of trading what I see rather than what I expect, okay. So for me, this was a valid buy, okay, and I'll tell you why, okay, because there was reasons for and against this buy, okay. Even though we've taken out the Asia high, would anyone else class that as an Asia sweep? At level there. Would you class that as a sweep of Asia? Anybody?
Yeah.
Yeah, you would? What about that move as a sweep?
Actually, I won't, because there is no solid reaction from this
Exactly,
level.
right? So I've got to go up to, and I'm trading intraday, right? So, oh, just my charts, I hate when it does this. Right, I've got to go up to the hourly time frame, and even on the hourly time frame, I haven't had a clear rejection of Asia, okay? Because what I want when I see my ISC pattern is I want to see price sweeping, okay? And then part of the ISC MSU is that sweep then takes out market structure to the left, so we get that change in momentum. So if price had done that, I could have sold straight away, okay? But price didn't do that. Price broke above, came back down, retested, broke above again, came back down. The first clue we had that we could be going bearish is this little structural point here. But you see, it just creates the daily high, and then it starts breaking down. But what it also does is it creates all this liquidity, which we then came in and tested. And then when I drop down to my lower time frame, come on. When I then drop down to my lower time frame, I start getting bullish momentum, okay? Now, there's an argument to say that actually we hadn't changed structure here, so maybe that was an invalid trade, but I was trading off the back of this range, and I probably was a little bit early on that in hindsight. It stopped me out quite quickly. But for me, all I saw right there and then was a bullish setup, okay? We look back onto the 15-minute time frame, and although we're in the top half of premium in that range, we weren't actually in the higher time frame, you know, that really lovely bit of premium that we love to be in. So there was just calls for this price to push higher, okay? So for me, I was trading correctly. Probably could have got a better lower time frame confirmation, but I was trading what I saw rather than what I expected. Now in that scenario, I lost out, okay? I lost a trade, 1R down, it's not the end of the world. But plenty of other times, okay, you look at all these situations where you think price might have broken bearish, it then actually pushes bullish. And we get another sweep of liquidity here. We then enter that early, but then it pushes bullish. So all I'm actually seeing for the last 24 hours is price continuing to push bullish when we're expecting it to pull back. And the only place we should really expect to pull back where it would be valid for it to take, for us to take like a risk entry, was if we swept the external liquidity. Because those external liquidity levels are those really high value areas. They're often, like we can see here, daily highs, where as Sam and I have tested, they end up being quite nice positions that you can get in and you can at least get a little bit of, you know, margin out of, okay? But for me, I'm looking at that and thinking, I'm still bullish right now, okay? And this bullish 5-minute range with liquidity built up indicates to me that I should be going bullish further. Now, when that happened and it broke down, that's then when my bias changed, okay? So you need to have these forecasts completed every single day. So one of the things that Pete and I were just discussing is making sure. So Pete, by the way, is going through a challenge at the moment, okay? And I'm going to be featuring a couple of you guys, or one or two of you guys every single month to kind of help you get through these challenges. I'm not charging anything for this, by the way. I've got a couple of people lined up for it, but I'm going to be doing it completely random. No, sorry, so let me start again. Anna, can I be a real pain? Can you grab me a water, please? Is that okay? I'm I've got a dry throat. It's this air conditioning because it's 34 degrees here. It's the air conditioning drying my throat out. Thank you. Yeah, so what I'm going to be doing over the next month, okay, I'm going to be coaching a couple of the guys to get them through their prop firm challenges. Selfishly, I'm going to be using this for content for my YouTube and things like that. And selflessly, I'm going to be giving you guys some free coaching to help you get through your challenges. And I think more often than not, what most of you guys need is you need accountability. You need somebody telling you what you should and what you shouldn't be doing, okay, which is what Anna does for me. If I ever come downstairs on a Monday looking sad, she always asks me if I broke my rules once again, because one of my rules used to be never trade on a Monday. And I'll always never forget the day I came downstairs once, and she goes, "What have you done? Have you traded?" And I was like, "Yeah, I have." I think I blew an account. It was a very sad day for me. But everybody needs an accountability partner, okay? The reason why I started this Discord that then became, this amazing community that we have was for my own accountability, because I wanted a journal where I could post my trades and post my analysis, and then it's grown into this amazing little thing, and I've got all you guys now kind of relying on me. So I want to give you guys that same opportunity, and for a lot of you, it's just accountability you need. You need to know that there's a consequence, and that consequence is me being disappointed in you, okay? If you don't follow your trading plan and you take trades you shouldn't be taking, I'm going to be on the Zooms with you going, "Pete, why have you done this?" And I make Pete feel really small and really silly for making mistakes. And just that fear of, I've got to talk about why I did this stupid thing. Also, part of that accountability process is making sure you're doing your journaling, which I know half of you aren't doing, because up until about 6 months ago, I wasn't doing it myself. And it's really easy to get out of these habits and to not follow the processes that you should be following, okay? But again, I think we touched on this last week. We've got to treat this like a business, guys, right? Okay? You've got to do all the work.
Check just on that. I think the other thing that just to call out there, which is probably right, which is it's probably going to be that aha moment. Mm-hmm. So the whole reason here, I think most people on this, community is to grow and learn as a trader.
Yeah.
And if we're constantly doing the same things wrong and getting the same results, and what a surprise. And I think if we do this, which is going to be very different for me, so my journaling has been dog-esque.
Yeah.
And so I think hopefully what will look like, say, well, if I can do A and B, which is through the journaling to the accountability, and it gets to the end result, which what I've been hunting for, then proof's in the pudding.
Yeah, exactly.
So,
exactly. And if not, if you end up next week in a loss, let's just say, it's not going to happen, but let's say you did, you'll be able to acknowledge what's happened, and you'll also understand whether there's something wrong in your trading plan or whether you've just had a bad week. And at the moment, you don't know the difference.
Yeah, exactly.
You're not doing the work before the trading day and after the trading day to acknowledge. You're not sitting down at the end of the day being, this trade was perfectly valid, it just happened to lose, there's no reason for it, the market just reached for a high liquidity or whatever it may be, okay? Or you go, should never have taken this trade, no liquidity sweep, no lower time frame confirmation, traded during Asian session, check's going to be mad at me, all right? And you'll be able to acknowledge those things properly. The other thing I think with journaling as well is, have any of you ever tracked calories before? Yeah? Never tracked your calories? Chris, Steve, never tracked your calories? MyFitnessPal, have you used MyFitnessPal?
Nah, not really.
Okay, fine. Well, Pete, you might acknowledge this.
Did it in lockdown. You become obsessed with it.
Yeah. And how many times did you have bad days and not log the chocolate and the crisps and the cake that you ate?
I never would ever do something like that, Check.
Of course you wouldn't. But in those moments, what we do is we don't log those calories, and we don't log those crisps, we don't log those chocolates, because if we don't log them, it's like they never happened. It's like the calories don't count anymore. All right? So it's so important to acknowledge the mistakes that you've made. And the fact that you feel bad about putting your chocolate into your MyFitnessPal because of the fact that you don't want to acknowledge the fact that you've eaten off your diet, it's the same process here. That one of the best things for me with journaling, what it really taught me was the fear I had of having to do 10 different journal entries because I'd overtraded the day before stopped me from overtrading. it was the single one thing that prevented me from taking too many trades, because I used to think, if I take another trade, that's another 10 minutes I've got to spend entering this into my trading journal. And really, you should only be taking one to two trades per day. So one trade morning session, one trade afternoon session, and maybe a second entry on each. So you shouldn't really have any more than 4 entries in your journal every single day. If you are finding that you look at your history file on your MT5 and you've got like 10, 15 positions in a day, you're over trading, okay? Another thing we spoke about earlier is kind of your staking plan and things like that. For now, until you're profitable, just take one trade, one entry per trade, okay? You don't need to be scaling into positions at this stage. You just need to be winning more regularly. So take one trade, stick one trade in. You've then got one trade to log, one trade to analyze, one trade to journal, and go from there. So make sure you've got your trading plans sorted, okay? Once you've done your trading plans, come to me, send me a DM, we'll go through it together. I'll let you know if I think there's anything that needs tweaking on it, and then I'll give you a copy of my journal that you can then use, and maybe we'll do a session next week on the journal and how to use it properly. But it's pretty simple, pretty self-explanatory. So you've got a couple of options with journaling. You can use something like TradeZella, which does it all automatically for you, but it will cost you 50 quid a month. Or you can use a Notion template, which is what I use, which is free, but it is very manual and you have to put everything in, screenshots in yourself, so that's up to you. Anyway, so we obviously lost that buy there, okay? Then price started making this bearish structure. Where are we? Over here, okay? Started making this bearish structure. And then for me, okay, I saw this big kind of push down. I think I was about to go down to the pool or something. So what I did is I just sent a nice safe stop above the new range. Okay, so for me, that was my new range. My 5-minute range was here. So from here to here, I entered about here, I think. So on the pullback, so I entered about there. And then I just placed my stop nice and safe, as you can see. We then created all this kind of, this is technically a BCR entry for those of you who've got kind of that far into the trade. So you've got the build up, you've got the consolidation, then you've got the raid, and then news came in and gave us that lovely little push. So then gave us that 2.44, made well up for that one little loss that we had earlier. And yeah, you know, we ended up on a really, really good day. That was kind of Wednesday for me. I think I did trade Monday, Tuesday. I think Tuesday was a particularly bad day, but I've journaled it, so it's gone now. So I'll just talk you through the trades that I've actually got on. And then we had a bit of a mucky day on, so this Thursday. So look, move this across. I can't see. I can't move you. So no, this was Friday. That was it. So I didn't actually take this trade, by the way. Okay, that was a trade that was outside my trading hours at 2:30 on a Thursday, on a Friday. So I didn't actually take that trade. That must have been Thursday. Yeah, sorry, that was Thursday we were talking about. Then apologies. I didn't actually take this trade. I drew that on when I've hit my limit for the day, or I've hit my target, or I don't want to trade anymore. To kind of quench my thirst for trading, I'll often put my trade tool on there just to see what if I did take that, what would be the outcome be, and then again that gives me data that I can work. For me, very similar setup. So I waited for the Asia liquidity. It wasn't a sweep, as you can see. It was a close above, really mucky price action, and then I waited until we got this kind of breaker structure. We then had a double breaker structure, which was here. So for me now, this is now a valid trade. I waited for a pullback, but again, I was out and about on the Friday. I knew that we could pull back and take out that high. So for me, I entered a position here, and then it just started mucking about. I ended up coming out around here. I only got about 0.25 out of that trade. I was pretty happy with the way that that was managed. I was pretty comfortable with the way that was managed. I knew from the fact that we refused to make any clear lows, we were then coming towards the end of the day. I knew that we were just, the likelihood of us reversing was quite high. So I took my profit out, 0.25. You know, I was pretty comfortable with that all in all. So that was my entries on EURUSD. I want to talk to you guys today about divergence, which I think can be really helpful for you, and kind of how to use them effectively. I'm going to illustrate them on kind of matched pairs, because I typically use my DXY chart for my divergences. So divergence, just so you know what that is when you've got one market that's closely correlated doing this, okay, making higher highs and higher lows, and then reversing, okay? So that would be my trading pair, for example, and you want confirmation that the market is actually doing this, and what's happening is, let me just get this right. Okay, so divergence is when your trading pair, which is this trading pair, is creating higher highs and higher lows, okay? And your closely correlated pair is making the opposite of that, okay? That's what we call divergences. That is when it shows that there's weakness coming into the markets, okay? Now, you can choose what you trade from here, okay? You could trade that one. That would always be my preferred option. The reason why is because we've got indication that that's a liquidity raid, and that's a safer entry, of course. You could also trade that one. It doesn't really matter. Does anyone understand the divergence, and does anyone understand what it shows us in the marketplace?
The SMT Divergence.
Mm-hmm.
Yeah.
That's the ICT name for it, yeah. But what does it actually show us? So divergences have been around kind of as old as time. A lot of people used to use the RSI indicator. They would wait for this sort of pattern to occur on the RSI. So RSI is the relative strength of the marketplace.
It would indicate a shift in momentum. You'd say that more volume is coming in the opposing direction,
Exactly.
and it's not yet taken effect through all pairs.
Exactly, yeah. So it could just be that, let's say this is EURUSD and this is GBPUSD. It could just be that Euro is slightly stronger, okay? But if we've got this setup appearing, and obviously it has to be used at the right locations, right? You can't just use this anywhere. It has to be used with all the other confluences. So it has to be used, when we've got higher time frame liquidity. It has to be used where maybe we're in an imbalance, or we're an area, a premium we're expecting a reversal from, okay? So nothing else changes, other than the fact that you might then start comparing your EURUSD chart to your GBPUSD chart, okay? Or your gold USD versus gold euro, as an example. I'm going to show you a couple of examples to make it a little bit clearer, okay? I'm going to show you a couple of examples on a couple of trades that we took. So Thursday, really frustrating day. So as we just discussed, I was in a pretty lovely trade on Thursday. Okay, and I'm not disappointed at this because I follow my trading plan at the end of the day. Gold, and this is where I think the lesson of kind of trading what you see, not what you expect. So gold, we were stuck in this range. So we had a bearish range down here. We were obviously expecting, even though it's bad to expect, but we were expecting a reversal from here, ideally. Okay, as you can see, we didn't get. I'm going to leave that on just so you've got it. And then within this bearish range, okay, we had this bullish range as well. So we had kind of external liquidity areas that were looking to get swept, that could potentially inject liquidity into the marketplace that could then reverse the trade. Because that's obviously what we want to get involved in, right? But the higher time frame indicates to us that actually the more likely play, since we've not cleared any lower than this level here, okay, this level here, the more likely play is that we're going to pull up into this premium level, okay? So this goes back to what we were discussing a moment ago of trading what you see, not what you expect, okay? It's really easy to get lost in expectations. In fact, as traders, we kind of do have a speculatory mindset, right? Okay? The whole risk of gambling and, buying low and selling high and all that stuff teaches us to speculate what might happen in the marketplace. And as traders, there is an arrogance to us. There is an arrogance to us where we feel like we should know where the market is going to go next, okay? One of the beautiful things about the trading strategy that you'll have access to is there are no parts of the strategy that require you to assume, expect, or speculate. Everything is built in such a way where you should only ever trade what you see, okay? There's never any need. And in fact, if you go back and look at your losing trades, I guarantee you most of them are trades that you've taken because you think something is going to happen, okay? So even though I'm acknowledging that we've got external liquidity here, so that is somewhere that I could expect a reversal from. I've got premium of this range, which is where I could expect reversals from. I've got a daily high here, which is where I could expect. I've got all these liquidity areas that I could be expecting reversals from. The two trades that I marked up, I didn't take them because I was in EURUSD. The two trades that I marked up were buys, okay? The reason why they were buys is I had no bearish setups, okay? So this, we're moving up towards this external liquidity level anyway. Lovely, nice and easy, 2R trade up to that external liquidity level. Perfect. You get into the marketplace, get out the marketplace. I've got loads of potential in my trade because if it keeps going, I can get up to 6R, but all I need is my 2R out. That gives me 1%. I'm happy. I'm out of the marketplace, taking my trade out, and you can see it fired up really, really nicely. Nice wide stop, because I expect with gold, it's really naughty. So gold will often come back and it will sweep its liquidity lows before moving to target. It does it all the time. Did it literally here, as you can see. Swept that liquidity and then moved to target. It's really bad for that gold, so you've got to keep an eye on it, okay? Second position was a bit more of a risk position, okay? What you can do with gold is once you have got this kind of momentum, we've got this bullish momentum, and you see these liquidity sweeps, you can get in really tight entries, okay, with just really small kind of indications. We're going to go bullish, so I'll show you this one. Okay, so if I zoom into that one there, okay, we had just that really tiny little, just really low time frame, look, change in momentum, yeah? Okay, there's a hidden MSU in there as well, but that's just a really simple change in momentum. You took out a couple of liquidity levels, and then we're pushing up bullish again, okay? Daily level takes us to 1.74. Your next level up, your potential of your trade takes you right up to another kind of 4-5R, okay? So two really, really good trades. I was maxed out in terms of what I can risk on my EURUSD trade, so I didn't get it, but that could have been, you know, a couple of lovely trades that you've taken. Now, the reason why these trades played out is why so many of your trades fail, okay? As traders, what we want to do is we want to catch the top always, right? You want to get in right at the top. You want to get in right at the bottom so you can catch all the pips, okay? But you don't need all the pips. You just need your 2R or your 3R and you can come out of the marketplace. And the reason why this trade's worked is the reason why so many of your trades over the years have failed, because you're always trying to catch the reversals. Now, there would have been a time where I would have seen that liquidity sweep in this premium level after we'd swept external liquidity, and I would have sold that. I would have done that so many times. But is there anything in that move down that indicates to me we're going bearish?
No, it's very progressive.
Right? Corrective, pullback, nothing really choppy. And then, you know, again, this is where patience really plays out. If you see this sort of price action at a liquidity level, that doesn't give me much faith that that market is going to push up. Look at what happened on EURUSD on Friday. See that? That same kind of corrective price action pullback, that gives me no faith that the marketplace is going to continue down, okay? What that tells me is that if we've caught a liquidity level right, what should happen?
Impulse moves should start appearing.
Say again?
Impulse moves should.
Exactly. Impulse and imbalance is one of the key things on my checklist that I look for every single trade. I want impulses and I want imbalance. I don't see any imbalance there because it was immediately filled, so that's dead now anyway. Price has got no reason to come back up and test that. And then what should happen if this was a momentum move is it should have that impulse move down, leaving behind the imbalance. We then get this corrective price action. We then should get another impulse move down we can then get into. Because we haven't had the complex reversal, okay? Oh, I suppose you could kind of argue that might be. But yeah, you haven't had the complex reversal, not a clear one anyway. You haven't had a double breaker structure with impulse and imbalances left behind. So that then tells me that price is probably going to continue higher. So I'm trading what I see, not what I expect to happen. Now, if this trade hadn't played out and instead it had done this and then this, then I could have got in on that pullback, right? And, you know, you don't need to catch the very top. You don't need to get in at this area, because if the market is moving down, okay, if we look back at this little push down over here, for example, come on. Okay, if you look at this push down here, from here to here, let me just draw this on. Okay, so from here to here, how many opportunities can you guys see on that chart to get into the marketplace?
Me personally, only one.
Only one? Okay, fair.
Near the EPA. That is all I can see personally.
Yeah. Okay, fair, yeah. So I see an opportunity here on the complex reversal, so you could have caught the top. Okay, that's one entry. Next day, I get the Asia sweep. Then looks like I've got some good structure coming down. Let's say I don't catch the very top. I've got another entry here. Okay, happy with that one. Yeah. Then I've got a pullback into this level, and then I've got another entry here. Okay, so, you know, it might have taken me another couple of days, but I've got plenty of opportunity to get into this marketplace and get my profits out. And if you're on a lower time frame, all of these little pullbacks could have given you other entries to get in. To be fair, there's probably another one there as well. That little pullback. Is that 10:30 by any chance? Can anyone see? Because I can't see because you guys are in the way. What time is that?
So it's around 10, 20, 30.
Yeah.
Right?
So that's your 10:30 pullback, right? So that's another opportunity for us to get into the marketplace and get 2R out. So if you hadn't caught the very top, okay, if you were quick on your hands, you might have caught that one, but that wouldn't be probably an entry for me. But you've definitely got two more there, and you've got another one there. So it doesn't matter if you don't catch this trade, remember. In fact, it's actually much better for you to get into one of these ones down here, because now you've got confirmation of a new structure and a new place to go bearish from, right? So it's really important, guys, for you to trade what you see. And that's one of the things that I want you to implement when you're putting these trading plans together. And one of the things that I want you to do for the following week is to make sure that you are trading what you see, not what you expect. Okay, Friday, very similar story. Me and Pete had almost the same day Friday. So I was in, again, exactly the same analysis. I was out and about, so I placed a nice wide stop. I knew exactly price could do this. I ended up coming out about here. I got about 1 hour out of the trade. I ended up coming out here. I caught it almost perfectly. And I came out literally just before that drop, because I saw how price was struggling to push back up. And I came out there. So I was done with it by that point. I wasn't having any more of it. Luckily I did, because I had moved my stop to break even and would have come out 0. So that was a really good setup. But again, it's exactly the same thing, right? Okay, price, although it did take out the Asia high, that's not a clear sweep. When we talk about Asia sweeps, guys, okay, and we didn't have very many good ones last week. When we talk about Asia sweeps, what we want to be happening when these happen, gold's not the best with it, admittedly. Can we find any on gold? Nope, 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 nope. That, okay, that's what we class as an Asia sweep, okay? Asia giving us a clear rejection, okay, a clear rejection in price. So no more than 3 candles. We want that ISC, okay, the institutional sweep. So we don't want any more than 3 candles above the level on whatever time frame that we're using the ISC on. We want impulse, imbalance, and then we want our MSU setup to come into the marketplace. You've been unlucky on this one because you wouldn't have got into it, okay? Gold's not the best for Asia sweeps, okay, just so you know. Gold likes to do quite a lot of movement in Asia, so it's one thing to be aware of. When that happens, okay, it can often give you a clear indication. For example, in this scenario, with clearly bearish momentum, loads of bearish momentum. Pardon?
Nothing.
Okay. Yeah, the chance of price doing this is probably quite low, but that's definitely something that we want to forecast for, because that would be somewhere that we'd like to see a sell from, but not on the sweep, right? What do we need to wait for first?
Again, a bearish engulfing candle.
Yeah, not necessarily bearish engulfing. We just need a change in momentum, right? Okay, we need a clear indication that the momentum has shifted.
Okay, huh?
Yeah? Okay, because then we get into the trade. We don't get into trade before that. That's what we call a risk entry. And you don't really want to be doing too many risk entries, you know, at this stage in your trading career. It's something more advanced and something really, even when you are advanced, you don't like taking as much anyway. So you want that clear change in momentum. You want your ISC MSU setup, okay? That then changes momentum and tells us we can go bearish, okay? But gold will do quite a lot of movement in Asia. When that happens, then it often doesn't give you those Asian sweeps as much as things like EU might do. If you go to the EU chart, for example, you get the Asian sweep a lot more, okay? So you had, well, Asia swept itself there. Again, what actually happens in Asia is really worth paying attention to. Okay, this one wasn't able to pull down as far enough. That one, lovely little Asia sweep, shows a really clear rejection of Asia. This one, again, lovely little Asia sweep, clear rejection of Asia, clear rejection of Asia. So when you get the Asia sweep, you don't want this to happen, okay? Because that's a close below. Not saying it can't reverse and then come back up like this one did, but that's a close below, okay? And then we use other factors for us to get then into the marketplace, okay? Anyway, where were we? Gold. How did we get onto that point? Lost my train of thought. Talking about gold, coming out of the marketplace.
Asia, we were talking about Asia.
No.
Say again?
We were talking about Asia sessions.
We're talking about divergence at first. That's why I started going on gold.
We were talking about divergences, weren't we? Why were we talking about the
Then we were talking about sort of opportunities to enter the market, talking about the different, I guess, the different premium and discount levels than Asia.
Are you saying why
you were
trade
talking
fails,
about
why these trades will win?
I can't remember.
Trading what you see and not what you expect.
Where would you like to start from, Jack?
I don't know.
Let's
go back to divergences. Let's show you some divergence examples. There was a reason for it. I will look back on the recording and we'll realize why.
Actually, you were talking that instead of taking trades from premium and discount, we could take trades from the middle as well if we see any setup.
I think that was a little while ago. Anyway, that doesn't matter too much. I'm just conscious of time. Anyway, yeah. So look, the Asian range is obviously a good one to use for our trading. But I think I remember now. We were talking about the way that it closes out. Oh, that was it. The reason why that wasn't there was some entry we were looking at. The reason why it wasn't a bearish change. Why it wasn't a bearish change of direction. Okay, because it's not just the sweep of liquidity that we're looking for. The sweep of liquidity signals us to get into a trade, right? It tells us to get into a trade, okay, to start looking for trade opportunities. It's actually the momentum shift and the price action that comes after the liquidity sweep, okay? And whilst I love using Asia as my main liquidity sweep, it's what happens after it that indicates us to get into the trade. This one, for example, I think this was the one we were talking about, okay? Although we did sweep Asia, there was no change in momentum for me, okay? So this, for me, I didn't look at that immediately and think that we were going to go bearish. The only reason I thought that we might end up sweeping is because we had this really corrective price action, okay? Anyway, let's talk through some divergences and hopefully we can find some on the different markets. So that was my liquidity level. That might actually give us quite a nice divergence. I haven't actually checked this beforehand, but let's have a quick look. So that was between, that was the London, no, it doesn't, this one. So that level on there is there. So that was just equal. So that just shows equal weakness. I'll tell you what is a good one though, okay? Let's say you were going to take this short bearish, for example. Let's say you were using the Asian sweep, okay? You were going to use the Asian sweep. You were happy with this structure and you were thinking, do you know what? I want a reason to go short, okay? If we look at here to here, okay, we've got weakness, yeah? We've got weakness in the marketplace. We've got this to this. That shows us divergence, okay? If you look at that same price action on gold dollar, okay, that divergence is the other way around, okay? So that gives us an indication that we could then be taking this short. So you could then enter like that, stop above the high. You hold down to your liquidity point, that gets you into the trade, okay? Now, I probably wouldn't have taken that because that liquidity area for me wasn't the right liquidity area, but you can see how useful this can be. Let's see if we get it on any of the other trades we took earlier in the week. So let's have a look at a couple of these entries here. So if I go back to, we're looking at, still can't see, I'll move you guys out of the way again, 2 seconds. I'm really struggling to get you right, okay. So if I look at that one, and that is at 10:05 on Thursday. Let me go back to this one. 10. Oh, for God's sakes! I'll put you at the top. Does that work? Yeah, that works. Okay, so that is 10:05 Thursday, 9:45. Okay, so I was going to keep doing that, isn't it? That's really annoying. 950, 950. So if I look at, sorry, it's the little pop-up window for Zoom with all your faces on gets in the way of something. It's either the trade, the charts themselves, so I can't choose between them, or my tools, or the time of the day. This is one of the three, so I think I've worked out. Okay, so gold, right? Thursday, we were looking at this trade positioning, okay? We had two options that we could have got into. The first one was down here, which started at 9.55 to 10.40, okay? So that'd be our divergence here, okay? So that's what we're looking for. We see prices making kind of a lower high here at 7.10 and then a higher low here at 9.55. So if we look at the same on Thursday, we go to 7.10, okay, 7.10 to 9.55, okay. You see we get equal lows here. So that would indicate to me that there is a reason for this to go long. We're already a long bias anyway, okay, but that to me is the same as this creating a new low, okay, because on gold, dollar, we've got a higher low. It's only slight, but you can see it higher low. On gold, euro, okay, we've got equal lows, which means there's a divergence between the two pairs and a good indication price is going to push higher, okay? If you then look at the second position that we took, okay, we had this low from 12.35 to 2.15, okay? So a liquidity sweep, as we saw there. I think you've probably all seen this already. So we've got 12.40 and 2.15. If we look back on our EURUSD, this is a really good one. 12.40, 2.15, beautiful little divergence, okay? So that gives you then a really clear indication that there is strength in this market. Now, what you want to choose to do, some people with divergences like choosing the one that shows more strength or more weakness. So that would be this pair. This one shows more strength, okay, because it's creating, this example, this one shows more strength because it's created the higher low. So that could be the one that you take. Personally, I like to stick to my main pair and then I just look at the divergence. I don't mind the ones that have liquidity sweeps. That for me is cool. That one's a little bit weaker, of course, but that to me is cool because I know I've probably got a much safer stop. I know that on my EURUSD chart, sorry, my gold euro chart, the fact that that's a higher high, the fact that that's a higher low, to me indicates that the likelihood is this is going to be the extreme low and price is going to keep pushing. So I quite like the ones that show less weakness, if that makes sense. So whatever you're trading, and if you don't know what correlates, just let me know, DM me and I'll show you. If you're trading EURUSD, then have a look at how it compares to GBPUSD, okay? Because they're two very closely correlated pairs. If you're trading gold, then have a look at the gold euro chart, because in exactly the same way, they're very two closely related pairs, okay? And if you're looking for that extra bit of evidence for you to get into a trade, that extra reason for you to get into your position, maybe slightly earlier, or you need that final confirmation, use the divergences because they can be really, really helpful. All right. I think we covered everything I want to cover. Oh, no, we didn't. Right, before I go through, I've got homework for you all today. You'll be pleased to hear, okay? Before I go through before I go through that, has anyone got any questions for me? or anything we discussed today. Anyone like to go through any charts or analysis at all from earlier in the week? No?
Bro,
The only thing I've got checked.
Say again? Say again?
I just want to go through, you know, when you put your tool on for your premium discount,
Yeah.
marking your ranges.
Yeah.
So when do you go down from time frame? So do you start off on the hourly, and then you go to the 15-minute, then to the 5-minute?
Yeah.
Or...
So I'll keep an eye on kind of like daily ranges, but as you can see, I don't normally draw them on because they're so slow anyway. And usually at the top of the ranges, you'll have like a major swing point. So you have like a weekly high or a weekly low or a daily high or a daily low. So I don't normally do it on the daily. I normally start my ranges on the hourly. It depends on, like, this chart's a little bit mucky, as you can see now. It needs tidying up before I trade next week. But for this one, this is my higher time frame range on gold. Okay, this is my hourly range, 2 hourly range. I kind of bundle hour to out 1 hour, 2 hour, and 4 hour together, and I switch between them depending on which one that's cleanest for me. So my hourly ranges is my first range. That's what I would class as my kind of higher time frame, media time frame range. I mean, my higher time frame is the daily, but I use the daily very differently to how I use the other time frames. You know, I for example, I would buy in premium on the daily chart, whereas I wouldn't buy in the premium on a 15-minute range, for example. Okay, but on a daily range, I'll do whatever, because you know, a daily range premium might be a week's worth of candles, for example. So I'm not fussed about it too much. The hourly ranges, it really depends on the marketplace. Like in this one, for example, because it is quite a tight range, I probably wouldn't be too keen buying above our range liquidity, which is this level here, okay? I probably wouldn't be too keen buying above that. I could do if it was really clear and obvious, but it wouldn't be something that I'd be in a rush to do. So my hourly ranges I would class as my median time frame. They kind of sit between the rules of my lower time frame and sit between the rules of my kind of higher time frame, okay? My trading ranges are always on the 15-minute because my entries are on the 1 minute. So Steve, I think you were on last week. We spoke about what our ranges should be. So if you're trading on the daily, okay, then you should be waiting.
Yeah, I've got all that wrote down here.
Yeah. Your 1 hour kind of change in momentum. If you're trading on, say, the 4 hour, then you're looking for a 15-minute change in momentum. Okay. If you're trading on the 1 hour, you're looking for a 5-minute change in momentum. If you're trading on the 15-minute, and you're looking for a 1 minute change in momentum. And that's how I personally would use the different time frames to kind of help you, get in and out of trades in the right way. So that's kind of what I'm looking for in terms of like momentum changes. For me, my main trading range is my 15 minutes. So I will keep a close eye on what's going on the hourly, okay? Like this hourly bullish range here, I was keeping a close eye on that. But again, the hourly ranges for me, I will use a little bit differently. So, I was happy buying up here because I didn't see any reason for the price to, to push bearish at this point. I saw bullish structure come in pretty soon after this bearish pullback. And when you look at it in context of the whole range, that was probably a slightly riskier trade. There was a risk of this pushing down, but the momentum was bullish. It was Friday for me, so I was happy to get into that on a bullish setup. But I'll draw my ranges on the hourly and I'll keep an eye on them. That then becomes for my week, my high time frame for the week, I suppose you could say. And then every single day when I'm going into the marketplace, like let's say this was a new market right now, and I was looking into it, and I was looking to where I should be taking trades from, I'd be looking at like my most recent 15-minute range. I'll be looking at that and be thinking, right now I'm still in the bullish range. I'm in the 15-minute, so I'll be looking at a pullback into discount for me to then take out that high. Okay.
Yeah, I get you.
Does that answer your question?
So on your but on your hourly range, so it's say a price comes up into premium, do you then look to mark out on a lower time frame?
Yeah, I mean if price, so this is my hourly range up here, that's my premium up there. So if price did this, okay, and then really correctively pulled back like that, all I would do is I would just draw out a new range, because that for me is still bullish.
Yeah.
And I know there's still an opportunity for price to take out some sort of liquidity in this discount area and for us to then push bullish out here. I've got enough room to get my trade there and get 3R out of it before I've even hit the daily liquidity. Okay? Those higher time frame liquidity pockets are always the ones that are most attractive to price. And the way I look at these a lot of the time is it's so unlikely for price to come all the way up here unless the volumes of orders have been taken out of here. Okay, and you can easily see where volumes of orders are. So if I just look at the volume rise range tool, okay, so if you guys use this kind of range tool indicator, it's a really handy tool to kind of show you where the volume in the marketplace is. So you can see these little bars down the right hand side. They show kind of like volumes of order in the marketplace. So you can see around here they're slightly darker color than these ones above here. So what that indicates to me is that actually, yeah, there's not a huge amount of volume left above that level. It's difficult for us to get it without that. Yeah, so the mass volume of orders are all in this section here. So when I look at that, it then doesn't give me much faith that we're going to take out the high. So these daily levels, okay, remember, the older they become, so that's now from the 5th of August, the older they become, the less orders are sat there because, you know, traders get bored, investors get bored, and they take their orders out of the marketplace. So the likelihood of something like that happening now looks probably quite a lot less, because if you look at where the mass volume in this whole range is, if I use the entire range, okay, it's all sat around here, which is exactly where price stopped at the end of the week. So the likelihood is that we're probably going to get a bearish setup from here pushing down to here, okay? Because the volume of orders sat around here now, even if I pull this tool back, it still only comes to here. So the mass volume of orders is sat within this premium section, okay? This is a really handy tool to kind of indicate. You can see that bar does get a little bit bigger there. So there is a chunk of orders in here as well, but the mass volume of orders is sat in this middle section, okay? And the tool obviously changes depending on where you set it from and to. If you do this section, it's above, but then we've got all of that liquidity as well. So there's just calls for doing both. And again, you can see the same thing, okay? Look at the volume of orders that are sat above there. So either one, if you include that little section here, it jumps back up. So it's kind of split between depending on how much of the previous candles that you include. So that would be kind of my two areas that I'd be now almost forecasting to take shorts from. So I would be okay taking a trade like this. I would be comfortable with it. If this was oh shit, sorry. Why does it keep doing that? That's really annoying. If this was up here, I probably wouldn't, because we've just taken out a key liquidity level. So I'd probably now be much more inclined to think that this is a much higher risk trade. Also, my potential is lower, right? Because, you know, the chances are we're probably going to retest that. So, you know, if I've got enough room for the trade to move to my next logical liquidity point, which is that daily level, 5R, that for me, that's plenty. I only want 2, 3R at the marketplace anyway. That for me is plenty. So I'm comfortable taking that. But I am getting to the point in a range like this where I'm starting to think that actually the likelihood of a reversal is higher, so it might just be better sitting on your hands. Even though the marketplace is only showing you a bullish setup there and then, you are at an area where a reversal is highly likely, right? So there's no harm in kind of watching and waiting. And if you miss that trade, you miss that trade. It's really not the end of the world, right? You're going to get another setup the next day or the day after. Yeah. Does that answer your question?
Yeah, perfect.
Where I absolutely would not be buying and selling is I would absolutely not be buying in the premium of a 15-minute range and selling in the discount of a 15-minute range. My 15-minute range is then no-goes. I buy in discount, I sell in premium. I do not switch that around in any circumstances. Cool? Right, so a bit of homework for you guys.
Thank you.
Bit of homework for you guys, okay? What I want to see you guys doing if you're trading this week is I want to see your analysis and your forecasting, okay? So if I'm looking at this marketplace, I'm obviously, at the moment, I'm seeing bullish setup. So I've just given you one bullish setup. That would be my one bullish setup that I'm accounting on in the week, okay? That's what I would be looking for. That would be my bullish setup, okay? That would be one of my bullish setups. That would be one of my forecasts, okay? I'm going to start putting, as long as I've got time to, I'm going to start putting all my forecasts in there for you guys, okay? So that'd be one of my bullish forecasts. Another bullish forecast for me might be a real extreme pull up, okay? And then a pull back into there, okay? And that'd be a no trade for me because, you know, it just wouldn't give me enough room for me to get into. So that would be maybe one of my other bullish forecasts. I don't know, okay? I haven't spent time looking at it properly. The bearish forecast is then obviously we've got, you know, pull back, new range created, sell off from there, okay? Or we might just get, you know, a pull up, then, you know, some structural change and come back there. Those would be my kind of my two setups for the coming Monday, okay? That's kind of what I do every single day. And most of you see what is my preferred setup because that's what I post in the charts. I'm going to start putting my forecasts in there for you properly. Something that Pete's going to be doing as well as part of his work this week. He's going to be doing his forecasts every single day. And what I want you guys to do if you are trading is to do exactly the same thing, okay? I want you to post your charts with your forecasts in. And the thing that I want you to do this week, the rule that you have to follow is this. You trade your forecasts and you trade nothing else. So we take away that ability for you to trade on impulse. We take away that need for you to be in the marketplace because, you know, the only trades you should be taking are the trades that are going to play out, the trades that are highly likely to play out that you've planned for, okay? If you planned for them, then there's obviously rhyme or reason for it. If you haven't planned for them, you're not to take them this week. I guarantee you by following that process, you will have a better week. I guarantee it, absolutely 100% guarantee it. The only trades you're allowed to take are the ones that you plan. And the rest of the time is yours. You can do what you want because you can set your alerts, price goes to where it needs to go, you take your trades, great. If it doesn't go to where it needs to go, then you don't take a trade, and that's okay because you've planned for that, okay? The other thing is if you are trading, you haven't got your trading plan, I want to see your trading plan as soon as possible. I really, really want you guys to understand that mentality that needs to shift now of you need to trade this like you're running a business, okay? This isn't a hobby anymore. This isn't something that you're just doing for fun. This is something that you all want to turn into a genuine career, okay? Just like you wouldn't go into business without a business plan, shouldn't be going into trading without a trading plan. Now, I don't expect you to take a week to complete it. I just want a really rough idea of your plan so that I can then give you the thumbs up and say, do you know what? Yeah, it's really clear rules. Or do you know what? Actually, you probably want to add in some rules for this, or you probably want to add in some rules for that. And then you can start trading for the week, okay? Send it across to me on a DM. I'll go through it straight away. I'll look through it and I'll approve it. And then once you send it across to me, I'll also give you a copy of my journal. And then we'll go through the journal next week, how to use it properly and things like that. But I think this could really help you guys, give you a bit of structure, give you a bit of accountability. Pete's going to have his own channel in the group soon as well. And I think, Anton, we're going to have a chat tomorrow, aren't we? I'm going to catch up tomorrow. So, you know, both of those boys are going to be doing exactly that. And, you know, in just the normal charts and analysis, guys, I want you guys doing the same. Put your analysis in there. You know, let's get these chats going. Let's get the conversations going. You know, you're going to have different opinions to each other. You can then raise questions. Why have you suggested that? I think Price is going to do this. You think Price is going to do that. Why is your suggestion different? That's how we're going to learn from each other, okay? There's a lot of me talking and a lot of you guys listening at the moment. Let's help each other out. And then I can wade in. You know, I can help you out. If somebody's, a lot of the time, analysis with analysis, you know, everybody's right, and there's a reason for Price to do everything, and you might spot something that somebody else doesn't spot and vice versa. Equally, you could be completely wrong, and I could have a reason why, actually, guys, you need to change this because, you know, this is definitely not going to happen. This is the reason why. So the more we can converse in the groups this week will be really, really helpful. But that's two things I want to see from you guys. I want to see you putting your trading plans together, having a checklist for your trades so that you know exactly what you should be looking for when you trade. And in the morning, in the chats, put your analysis in there, put your forecast in there. I promise you this, if you forecast for the day and that trade plays out, you will feel like $1 million. You will feel so, so good for what you've achieved. And then the next day, you'll come to the markets, you'll do the same, you'll feel even better. If you don't do that, I'm losing my voice here. If you don't do that, and you come to the markets and you take a trade that you haven't forecasted and it loses, you'll just kick yourself. or you take a trade that you haven't forecasted and it wins, it builds like a false sense of security that you know the market and you're in tune with the market. I know we've all felt that before. You don't need that mentality. You need to treat this like a business. Remember, good trading is really boring. It is really boring because you forecast it, you take the trade, it plays out, you're done. It's not exciting at all, okay? It's really boring, but it does make money, okay? And the aim here for all of you, I would assume, is that we want to get £500,000, £1 million, £2 million worth of funded capital so that we can then start taking 5-10% of that home every single month. These are the steps that need to be taken. Those are the steps that I've taken in order for me to, climb the ladders with these prop firms as well. So let's get that going this week, guys. Let's have a really, really positive week. Lots of wins in the group. My aim is to get as many of you funded as I can by the end of the year, really. I want to try and get 10 to 15 of you funded by the end of the year, and I'm going to help as much as I can. For free as well. All right? Cool. Any questions?
Sounds good, man.
So
Love it.
Cool.
Great work.
All right. Well, look, I'll let you all get on with your evenings. Thank you very much, and I'll see you in the charts tomorrow.
Thank you.
Cheers, guys. See you later.
Thanks, man.